Simon, thank you so much for your time today. It's clear that most investors were pretty happy about Bafana's draw on Friday, and this is why we're seeing incredible gains coming through on the local bourse. Some insights into what you saw happening in today's session, because it was mostly about resources, which gained over 3%.
Evening, Eleni. It really was. I mean, the day started positive. The futures pre-market from 8:30 said indicated we were going to have a good open, and it just went from there on. As you said, resources really leading the way, and in fact, the resource index closed at the high of the day with this closing today. Banks were doing well, came back a bit towards the end, but still really strong close there. Not as good as the resources, and volumes picked up. It started really slow. At some stage this morning, we were sitting at a very modest 2 billion. I didn't actually leave my desk before the final numbers came through, but including the closing auction, we were probably 8 or 9 billion, which is kind of average day, and I thought we might be a bit down, a bit of a hangover from all the soccer we're seeing.
Well, Simon, I hope you're not sitting with a hangover because of all the soccer, but back to the markets. No. Looking at Harmony. Harmony was at the bottom of the top 40, down 0.6%. Gold price is looking quite subdued. Goldfields also coming under slight pressure, well, in fact, only gaining 0.25%. Interesting though, Exora up 4.4%. We had Anglo up 4.2%, Sasol gain of over 4%. What has been driving the resource sector? Because is it about the global recovery and the fact that perhaps things are looking better than we initially thought, or that we thought a couple of weeks ago when most European Union countries were under the spotlight because of the possibility of default?
First part first, the gold stocks, what seems to be happening at the moment is when the market generally is doing well, people are selling the gold stocks. They've become a very much defensive sort of, when things are looking really grim, people are jumping into gold, not so much tracking the gold or the rand gold price as much as perhaps in the past. So really today's strong market, gold stocks take the selling, and as you point out, resources left, right and centre across the board, some better than others, but broadly the resource stocks doing very well. On the back of that idea, well, it looks like Europe's going to survive. It looks like double-dip recession is off the table. And I think back to reality, and what people have been saying now for a year or more is that this recovery was going to be fragile. And I think what we saw during May and a little bit of April and June was just how fragile, but largely we've come through intact, maybe a little bit wiser, a little bit more scarred, but the buying is back, particularly in those commodity stocks.
Well, Simon, you said that perhaps the double-dip recession is off the table, at least for now, and I'm quite hesitant to say that the rally is in fact intact. What do you make of the recent rally? Do you think that it's here to stay? Do you think that we'll be seeing gains coming through? Because, many are now questioning about the correction that we saw in most global bourses, and whether now it is time to start looking at the fundamentals and to stop focusing on the speculation that has been coming to the fore.
I think that's a good point, and I don't think this is going to be a massive rally. I mean, if we go back to when we peaked at the all share almost at 30,000, we had a pullback of a little over 10%. I don't think that was unrealistic. I think it was well positioned, well timed, and it was kind of around that whole worries about defaults and contagion and the like. We know that story, and that didn't cause the market to sell off massively. 10%, 12% is not fun, but that was a fairly healthy, good pullback from where we were. The trick is what's happening going forward. I don't see how we can suddenly rocket up back to those highs of this year, never mind the 2007, 2008 highs. I think more than anything, we're probably going to see a bit of sideways volatility, but that broad trend sideways rather than down or up. Then down the line, and by down the line later this year or early next year, we can start a rally going up again.
Well, Simon, interesting to note that, yes, resources performed relatively well in today's session, but we had Investec Limited gaining 5.6%. In fact, at the top of the top 40, RMB Holdings a gain of over 5%. What's been driving the financial sector here in South Africa?
Really what's been driving financials is we've had some trading updates that certainly helped. Again, the financials were being sold off to a degree during May, and what we've seen now is that back to the financials have done, particularly if we look at our local, the big four, we throw Investec and RMB and the like into that mix, they've done fairly well. The worst is probably behind them. Certainly the consumer debts are not worsening. The consumer isn't out there going crazy yet, but the worsening of the debt has gone, that levels are improving. The corporate debts are nothing like people thought they might be. So when the financial stocks get sold off to a degree, folks are coming in and saying, short term, medium priced, but let's look 1, 3, 5 years, suddenly offering really good value.
Simon, looking at other news that came out in today's session, the US finds $1 trillion worth of resources in Afghanistan, and they don't really give a lot of information about the lifespan and so forth, but we know it's about gold, it's about copper, it's about cobalt. The interesting one is lithium, because it is about new and renewable resources, and lithium is used in a lot of the new technology that we've been seeing. What did you make of that announcement?
There are two sides to it. I think the one is the spin side. I mean, reports I was reading pointed out that the Afghanistan war is now the longest war America's ever been involved in, surpassed the duration of the Vietnam War. They needed some spin there. And then, in fact, when they say found, the Russians had put some of these deposits on their maps, and that's from the Afghanistan war in the 1980s. So some spin on that side. On the flip side, what does it say to us is that Afghanistan's often been viewed as a country without very much beyond perhaps poppies and the like, and this gives it a real tangible base sort of to underpin an economy and the like. That said, it's a long way down the road. You don't suddenly wake up and start a resource-based economy, but I think, and again, if we take really long-term, 10, 20 years, it really gives solid good hope to Afghanistan as a country and as a region.
And it's going to be interesting to see what plays out on the resource front and how it affects the resource prices. Looking at Pick n Pay very quickly, gaining 0.6% under the spotlight because of the way that we've been seeing the company manage its money and also its shareholders and the way that things are dealt there. What did you make of that news? Because it does seem that they're going to be punished for the way that they're operating at this stage, and it's something that, of course, is a legacy issue as well.
Well, it's very much at the corporate level, particularly where they've got the holding structure, where there's Pick n Pay stores. Pick n Pay Holdings holds 51% of Pick n Pay stores, and therefore the Ackerman family holds 51%. So technically they own 26%, but they have control. These pyramid structures were very big in the JSE in the 80s and early 90s. Really, they've disappeared. Naspers has got some sort of valuable shares. The N shares are 1,000th of the normal vote. Beyond that, there are none left. The JSE won't have new pyramid structures on. And a quote, and it's actually from Sean Stockert from Stanlib, so we'll credit him with it. He says, control should be via excellence rather than through votes. If you can have 30% of the holding or even 20%, if you're brilliant management, you will retain control.